Hello everyone, this is William and Abraham for PropertySold.ca, and today we're going to talk about consolidating your debts. Abraham, it's right after Christmas, January. People are just starting to get their Visa bills and their MasterCard bills in the mail, and they also have their car loans and maybe a personal loan. So they might owe a lot of people a lot of money to different people at different interest rates. It could be 26% on a credit card. It could be 8% on a car loan or a personal line of credit.
Right.
So let's talk to everyone about how they can save money by combining those into one payment and one outstanding debt.
Consolidating your debts. That's
Yes.
what we're talking about today too. And consolidating your debts is, a really good way to save a lot of money in the long run. Because I'm not sure about you guys, but if I have my Visa card up there, I know I'm not paying $5,000 or $4,000 every month to bring it down. I'm paying, $200-300. Imagine,
Or even the minimum.
or the minimum, yeah, $50,
Yeah.
$75. Imagine how long it's going to take to pay off your credit card at $75, $100, $200 a month if you have a balance of $6,000, $7,000.
And they're charging you 26%.
And they're charging you 26%. Now that's a lot of money over time that you just may not realize that goes out of your pocket.
So what do they do?
Well,
They have all these debts. What do they do?
Well, I always like to use the analogy. Put all your debts into a bucket with the smallest hole.
Okay.
That hole is the interest rate that you're paying out. So all these high interest rate items, bring it into something that's got a lower interest rate. Usually what people do is they pay off their credit card with their line of credit because the line of credit has a lower interest rate, prime +2. There's even further. You can go even further than that. If you have equity in your home, if you've seen your house price double over the last 7 years, like a lot of people have in Canada, well, at least in the West, in BC and in Ontario, and if you have the equity built up in your home, you can use that money, that equity, to pay off your higher interest rate debts through a secured line of credit, called a HELOC, matrix mortgage, home line, depending on the lender, or a refinance of your existing mortgage. You're paying $400, $500 a month right now to all these different, lines of credits, loans, credit cards right now. You might as well bring all those balances into your mortgage and put that $500 on your mortgage at a lower interest rate.
So if they bought their home for $300,000 and now it's worth $400,000, they have equity and their current mortgage is $250,000. They can take out $50,000 of their home, get that chunk of money given to them at a lower rate, and use that to pay off the other bills.
Yeah, and lower rates, we're talking about prime plus 0.5 or prime plus 1.
So what would that be?
Which is 3% today, prime interest rate. So you're looking at 3.5% to 4%, which beats secure lines, which beats unsecured lines of credits, which are prime plus 2, 2.5, 3. Visa cards at 20%, even car loans at 7% or personal loans at 7%. There is no other vehicle out there that has a lower interest rate to borrow your money. So that's a secure line of credit. And well, mortgages today, we're looking at prime minus 0.9 on an interest rate on a mortgage. So if you wanted to refinance your mortgage, a prime minus 0.9, you're looking at 2.1%. So really, it's the cheap way to do it. Fixed rates, 3.49, still much lower than your personal loans, your car loans, your lines of credits, and your credit cards. So if you can find that bucket with a smaller hole, you're going to be losing less money each month to interest, and interest will kill you. It's not paying back your debts. Everyone's going to pay back their debts. They intend to do that. The problem is the interest, is managing all that interest that's going out of your pocket to the lenders. So find a way to do that through a secure line of credit or refinancing your mortgage. We can do that here at Property Sold. I can give you the numbers. I can run the numbers for you. Say, hey, this is how much you're paying each month. This is how much you could be paying each month, and how much money you're going to save over time. It's an easy calculation, and really the answer is in the numbers. You'll see that the bucket with the smaller hole is the way to go.
Do the math.
Yeah, do the math.
Excellent. This is William and Abraham for PropertySold.ca.